Hi, welcome to the channel. I'm going to cut right to the chase because I think this is really important. If you're not aware, BlockFi, a crypto lending platform that offers very high yields on cryptocurrency, has recently been investigated by and settled with the SEC. In the SEC's investigation, they've published a report that states that BlockFi has been lying about the safety of their platform for years. In the report, it states, and I quote, "When BlockFi began offering their interest accounts, it intended to require over-collateralization on a majority of its loans to institutional investors, but it quickly became apparent that large institutional investors were frequently not willing to post large amounts of collateral to secure their loans. Approximately 24% of institutional crypto asset loans made in 2019 were over-collateralized, 16% in 2020, and just 17% in 2021. As a result, BlockFi's statement materially overstated the degree to which it secured protection from defaults by institutional borrowers through collateral. Let me explain. Basically, everyone knows that these crypto lending platforms aren't as safe as traditional banks because they don't have FDIC insurance. Basically, whenever you put your money into a regular savings account with a bank, these banks lend out that money to pay you a very small interest amount. Right now, that's sitting around 0.5%, which sucks considering that inflation is almost 8% at this point. The reason that you know your money is safe is because it's insured by the FDIC. FDIC stands for the Federal Deposit Insurance Corporation. Basically, if the bank that you're saving with fails, this government agency will step in and give you your money back. Well, because these crypto lending platforms don't have FDIC insurance, they need to provide other reasons as to why your money is safe being held with them. And to do this, for years, these crypto lending platforms, including BlockFi, have been claiming that the money that you've been lending them has been over-collateralized. What this means is that there's more collateral being provided to them than the money that they're lending out. For example, let's say that you're getting $1 million loan to buy $1 million house. The bank is confident that it'll get its money back because you'll either have to A, pay them the $1 million back, or B, they'll take the house and sell it for $1 million. In crypto's case, because it's so volatile, they have to have more collateral, aka the house, than what they're lending out. So, for example, I'm just gonna make up some numbers here. Let's say that I wanted to borrow $1,000 cash from BlockFi. I would have to provide them $1,500 worth of Bitcoin. That way, if the price of Bitcoin randomly crashed by 30%, they would still have more in collateral than the amount of money that they lent out. And if the price of that collateral, aka that Bitcoin, ever fell below that $1,000 threshold, theoretically, they should be able to sell it before that point and get their money back. This is why over-collateralization is so important when it comes to crypto lending. It keeps your money safe. And as we now know, BlockFi has been lying about this for years. And again, you don't have to take my word for it. It is in a public SEC filing that's on page 6. I've linked that below. This is a huge deal. BlockFi alone claims that they manage over $10 billion worth of assets. And the craziest part is most of these other crypto lending platforms are probably doing the exact same thing or even worse. BlockFi actually worked with the SEC to become federally compliant, which is why we now know that their claims of over-collateralization aren't accurate. Most of these other lending platforms have avoided the SEC like the plague. If BlockFi had to increase its risk in order to achieve these insanely high interest rates, what are the chances that these other lending platforms with even higher interest rates aren't doing the exact same thing? I would say that it's very unlikely. There's very little transparency when it comes to a lot of these lending platforms, so we just simply don't know for sure. My question is, why not be transparent if you're being responsible? It's this lack of transparency that tells me that they are doing the same thing, if not worse. For example, if a centralized lending platform like Crypto.com's Earn was over-collateralizing their loans, they would be bragging about it. But Crypto.com gives you absolutely no information as to how they're protecting your money. Just a warning at the bottom of the page about how your money isn't FDIC insured, and they don't even use the FDIC acronym because it's the most recognizable. At least platforms like Gemini Earn are honest and tell you that they may or may not require collateral. They're transparent about not being transparent. And on top of all of this, there are rumors that these lending platforms are using a very risky process called rehypothecation to maximize their returns. It's a topic for another video because it gets very complicated, but basically, you know that collateral that they're supposed to be holding on to keep your money safe? Well, through rehypothecation, they're lending out this collateral in order to make even more money. Collateral that should be held on to minimize your risk. This can lead to your Bitcoin or whatever you're lending to them being leveraged multiple times over. Again, this topic is definitely more complicated than this, but it's too much for this one video. Now, before I finish, I have to mention, if BlockFi is able to become compliant with the SEC's regulations, it'll probably become the safest lending platform out there due to added transparency. When one of these lending platforms can prove that they're A, over-collateralizing their loans, and B, prove that they're not rehypothecating their collateral, I'll reconsider using one of them. Until then, we just simply don't know if one black swan event can cause all of this to come crashing down. I simply just don't want one of you guys to look up and realize all of the money that you lent to them is now zero. So in conclusion, be careful out there. These ridiculously high yields on crypto and stable coins do come with risk. So thank you guys for watching, and I'll see you next time.
Attention young men and women, subscribe to Travis White's channel. He needs your help to defeat the evil, broke YouTuber depression.